topic. What is tax? What is tax? See, actually, we all require money to run our family. Similarly, even government requires money to run the country. Like, so the government tries to get money from the public, demands from the public as tax in order to provide facilities and amenities to the people. So let's see what is meant by tax from the point of view of the government. Tax is a revenue for the government which is to be utilized for public purpose. Now only I told they collect money from the public and the same money is utilized for the purpose of the public to meet out the needs of the public. So from the point of view of taxpayer, what is tax? Tax is a compulsory payment to the government under an act. Under an act is Income Tax Act 1961. 1961, which came into existence with effect from 1st April 1962, which is applicable throughout India, including Jammu and Kashmir. And you tell me to whom we pay income tax? To whom we pay income tax? That is, to which government you pay tax? So for that purpose, to find out that, you can see this classification that is under Constitution of India, which is classified into Union List, State List, Concurrent List. Under Union List, this is especially for parliamentary, which has got the exclusive power, that is the central government. Under this, there is an entry number 82. Under entry number 82, it states income tax other than tax on agricultural tax. Okay, then actually this entry number 82 specifically states that we all pay income tax to the central government. We all pay income tax to the central government and not to the state government. This is specified under entry number 82, where it states income tax other than tax on agricultural tax. Okay, the next under Union List, you got another entry number 83 that speaks about the customs. We pay customs to the central government. We pay customs to the central government. Then another entry number 84, which speaks about the excise duty. You'll all wonder, we are not paying excise duty today, only GST is there. Yes, we pay excise duty today also. But who pays excise duty? Manufacturer pays excise duty for the produce that they produce. For example, petrol, excise duty is charged, and cigarettes also excise duty is charged. Now let's see what comes under state list. Under state list, this has like here, who has got the power here? State legislature. They have got the exclusive power here. So here under entry number 51, it speaks about the excise duty. Is here again an excise duty comes under state list, but on which type of product they charge excise duty is on alcoholic liquors for human consumption and drugs also. And what is this concurrent list? Concurrent list is both central and state government, which is going to deal with civil and criminal subject matters. So example, you can tell education, you can tell marriage, etc. So this chart explains to whom you pay income tax. We pay income tax to the central government, and that is specified under entry number 82 under Union List. And next, tax is classified into two: direct tax and indirect tax. What is direct tax? It's an amount of tax to be borne by that person upon whom it is imposed. So upon a single person, on the same person, tax is imposed and he pays. That is why here direct tax is the levy and burden is on the same person. Example, the income tax we pay. The income tax we pay. What is indirect tax? Indirect tax is the amount of taxes that can be shifted from one person to another person. It is imposed on one person and it is paid by some other person. Okay, that is GST and customs. GST and customs. I'll give you an example here again. Manufacturer sells a product for rupees 165 to the wholesaler. And the wholesaler sells the same product at rupees 200 to the retailer, and retailer sells the same product at rupees 250 to the consumer. So who pays the tax here? Who pays the tax here? Only the manufacturer pays the tax, but he recovers it from another person, that is from the wholesaler, and wholesaler recovers it from the retailer, and retailer recovers it from the consumer. This is what is called as indirect tax. And let's see the difference here. Like here the meaning, that is the burden and levy is on one particular person, that is called as direct tax, and indirect tax is on different person. Example you have got under direct tax, income tax and wealth tax. Today we don't have wealth tax, we have got only income tax. What are the examples of indirect tax? You have got sales, VAT, excise, customs, service, but all these together are called as today GST. But today also we pay customs, we pay excise also, but it's all together called as GST. You know on what products you pay excise duty. Okay, so these are the difference between the indirect tax and direct tax. And the next slide we'll be seeing the definitions. The first definition is person. Person according to section 231. Who is a person? He can be a natural, and a person is an individual. Person is an individual. Individual means a natural human being. Natural human being. He can be a male or female. Okay, minor or a person of sound mind or unsound mind person. That is Mr. X, Mr. Y, Mr. Z. They are called as an individual. Okay, then an Hindu undivided family. A Hindu undivided family, it consists of persons who have descended from a common ancestor. Okay, for example, I'll tell you Mr. X, Mr. Y, sorry, Mr. X, Mrs. X and their children. Okay, they have got an ancestral property. They are receiving rent from the ancestral property. Who will pay the tax? Mr. X, Mrs. X and the children. All together they are called as a Hindu undivided family. A company means can be a private company, a public company, it can be a domestic company or a foreign company. On the whole, they are called as a person. A firm, a partnership firm. A partnership firm, they are also called as a person. An association of person or body of individuals, whether incorporated or not. An association of persons, who are called as association of persons. Like here, an association has been formed. Cricket association has been formed. For example, Mr. X joins with KVB Bank Limited, with local authority and with companies or any other like body of association. They join together to collect fund. So it is called as an association of person. Okay. Body of individuals, Mr. X, Mr. Y, Mr. Z join together. They are called as body of individuals. Okay. Local authority, it can be a municipal, a corporation, a civil hospital, a local panchayat in villages and all, no, that all they come under local authority. Then every artificial juridical person, okay, not falling within any of the above categories. They don't fall under other categories, but they are come under artificial juridical person. Like example, when at the time of liquidation, the court appoints a person, is called as a liquidator. As soon as a liquidator is appointed, the assets and liabilities are transferred to the liquidator, and he is liable for everything. So when he earns remuneration, what is that, commission, he needs to pay tax. So he is also called as a person. Other than individual, Hindu, undivided family, company, firm, association of persons or body of individuals, local authority, the other things fall under artificial juridical person. So they are called as. Now we are in the next slide. I will explain, like you can find out under which category they all come, like Delhi University. Delhi University is called as what? Which, and under which category it comes? Artificial juridical person. Artificial, like educational institution, universities and all come under artificial juridical person. DCM Limited. Limited means company. It falls under company. Company is also a person. Delhi Municipal Corporation, it is a local authority. Delhi Municipal Corporation is a local authority. Taxman Publication Private Limited, again a company, limited company. Then XY company firms of X and Y is a partnership firm. It falls under partnership firm. A joint family of X, Mrs. X and their sons A and B, they are called as what? Hindu undivided family. Then X and Y, who are legal heirs of Z. Z died in 1996 and X and Y carry on his business without entering into partnership. They are called as association of persons. Now you would have understood what is meant by a person according to the definition. Okay. Then next is assessment year according to section 2(9) and previous year according to section 3. So before seeing what is meant by assessment year and previous year, you should know there are two types of year. One is financial year and another one is calendar year. Financial year, it starts from 1st April and ends at 31st March, financial year. And this financial year is only used for assessment purpose. Okay, calendar year will not be used for assessment purpose. And for what you use calendar year? Calendar year is for only books of accounts and not for assessment. So you keep in your mind that this assessment year will be based on the financial year. Will be based on the financial year, which starts from 1st April to 31st March of every year. Okay, now let us see what is meant by assessment year. Assessment year is the year in which you pay tax, which falls after previous year, Now let's see what is this previous year means according to section 3. Previous year is where is the particular year where you earn income. You earn income which will be taxed in the next year, So in the next slide, you can understand what is this assessment year and previous year. For example, you see X sets up a new business on March 3rd, 2020. What is the previous year for the assessment year 2020 and 21? Now only I told what is this assessment year. It will be a period of 12 months which starts from 1st April to 31st March. Now here they are given here assessment year 2020-21. 2020-21 here. So this 2020-21 is the assessment year. So what will be the previous year? Previous year starts from 1st April to March 3rd, 2020, right? But here what happened? That is March 31st, 2020. Now here the X sets up a business on March 3rd only. So the previous year will start from March 3rd, 2020 and it will end by March 31st, 2020. Okay, did you understand? So if the assessment year is 2020 and 21, previous year will fall on 2020 here. That is, it starts from here because the business was set on March 3rd. It starts from March 3rd to March 31st, 2020. March 31st, 2020. Okay. Then X joins an Indian company on January 23rd, 2020. Prior to January 23, 2020, he is not in employment. He didn't have any job. He has no other source of income. What are the previous years for the assessment year 2021 and 21 and 22? 2021 is the assessment year, means when he joins the firm or the company, he joins by January 23rd. So the previous year will start from January 23rd, 2020 to March 31st, 2020. Usually it will start from April, but here he joins the Indian company only on January 23rd. So the previous year will start from January 23rd, 2020 to March 31, 2020. But for the next year, 21-22, it will usually start by April 2020 to March 31st, 2021. That is previous year. 21 means it will go to the previous year. Previous year means 20. It starts from 20 and ends by March 31st, 2021. Okay. Then the next slide is, next definition is the assessee. Who is an assessee? Assessee is the person who should pay the tax, who files the return. He becomes the assessee. Okay. So he can be an individual. He can be an Hindu undivided. All the person, no definition of person comes here. Like he can be an individual. He can be an Hindu undivided family, a company, a firm, association of person, body of individuals, local authority, artificial juridical person. Everyone are called as an assessee. But there are certain conditions. There are certain, it includes, assessee includes person who has earned income, either income or loss, is called as a normal assessee. Is called as a normal assessee. Okay. And there is another category of assessee, deemed assessee. Deemed assessee. Deemed assessee here is who is liable to pay tax for the income he has earned, also liable to pay tax for the other. Also liable to pay tax for the other. Example, guardian of minors. Guardian of minors. Guardian will have to pay for tax for the income that has been earned by the minor for his talent. For his talent. Even agent of non-resident. Agent of an non-resident and trustees. Okay. The next category is assessee in default. Assessee in default. That is, a person is liable to fulfill certain provisions or duties. But if he fails to fulfill the provisions or duties, in that case, he becomes assessee in default. He becomes assessee in default. For example, employer's duty is to deduct tax, submit it to the government. But in case the employer fails to deduct the tax and submit it to the government, in that case, the employer becomes assessee in default. Did you all understand? Can better understand under this chart. Like here, an assessee is a person. Assessee is a person. Like here you can see an assessee is a person on whom a tax is imposed. So he will be paying for any other sum of money. This any other sum of money, it can be penalty, it can be fine, which is payable under this act. He is called as an assessee. And assessee includes, according to section 27, it can be a deemed assessee. Now only I told he will pay tax for himself as well as for others. He becomes deemed assessee. An assessee in default is when he fails to follow certain provisions and duties, he becomes assessee in default. Okay, like he is not paying the tax. Okay, he will become assessee in default. And here, if he is going to take any proceedings to find out whether it is an income or a loss or whether money should be refunded, he becomes an assessee. For example, if any person is going to file a return to find out whether he has earned income or whether he has earned loss or to claim refund, he is called as an assessee. You can see I have given example in the next slide. Example 1, income of X. That is, his age is 35 years and his income is 2,50,000 for the assessment year 2021. He does not file his return of income. Does not file his income, that is return. Okay, income tax department does not take any action against him. Why? Because the income that he has earned for 2020-21, That is in the previous year, 1920 has earned only 2,50,000. The slab is, if it is going to be 2,50,000 and less, he need not file a return. He need not file a return. So he is not an assessee. He is not an assessee at all because the income is less. The slab is less here, 2,50,000. So he didn't file a return, and no action is not taken against the assessee because he is not an assessee. He is not an assessee. Then next second example, you see, income of Y, his age is 38 years. His income is 2,55,000, which is going to be more than the slab. That is, it is going to be more than 2,50,000. The previous case, it was only 2,50,000. And in this example, it is going to be more than 2,50,000 for the assessment year 2021. So he did not file his return of income. Okay, even though he has not filed the return of income, his income that he has earned in the previous year is above 2,50,000. So he is an assessee. He is an assessee and he will have to file a return of income because his, what is it? The income that he has earned in the previous year, which is the previous year here. Assessment year is going to be 2021. Now, previous year will be 1920. So in the previous year 1920, he earned more than 2,50,000. So he is called as an assessee. He will have to file a return. Then third example, income of A for assessment year 2021 is in minus. It means that he has earned a loss of 60,000. He files his return of income. Why he files a return of income? To find out whether it's a loss. He has filed a return of income. So he becomes an assessee even though he has earned loss. He has incurred loss. Okay, the next example, income of B. His age is 28 years, is less than 2,50,000. He has earned only less than 2,50,000 for the assessment year 2021. He files his return of income to claim refund. Yes, he is filing return of income to claim the refund of tax deducted by the X Limited. X Limited has deducted some tax for the interest that he has paid. So he has filed a return. So he is called as an assessee. Okay. Thank you.